Good day, everyone. This is your European Open briefing for Tuesday, July 26. My name is Michael Florentiades. I'm the chief economist here at xm.com, and these are the key points you should be aware of today. The yen has gained on a less than expected fiscal stimulus newspaper report. There was some US dollar profit taking in line with the yen strength, but also we saw the US dollar losing some ground versus the euro ahead of the Fed meeting that starts today and ends tomorrow. Sterling is under pressure on bearish business sentiment surveys, and Bank of England members, MPC members switch to stimulus rather than stay the course. And for the calendar, we had New Zealand trade figures earlier today, and then we have US consumer confidence, new home sales as well. So pretty quiet day for the European session. As you can see here in the chart, dollar yen dropped sharply. It gave up 106. Now it's trading at 104.26. Why was that? There were newspaper reports that the Japanese fiscal stimulus will be in the order of 6 trillion yen rather than 10 to 20 trillion yen that was rumored about at first. The Bank of Japan meeting is also coming up, and volatility is to be expected, and I think this underlines the extent to which expectations have built up for aggressive fiscal and monetary action, stimulus, and if those expectations are not met, well, you can see today what happened, from a newspaper report. So I think this shows the volatility that we should expect in the coming days. With respect to the US dollar, it's had a fairly decent run. It climbed up to 97.5, the dollar index has at least. And we see that euro dollar also has climbed above 110 once more, although it's difficult to find the exact catalyst for euro strength. It seems that the 110 level is a bit of a magnet for the euro. Now, it's important to point out that the market is going into the Fed meeting expecting that the US Central Bank is going to deliver a slightly more hawkish statement in line with the good data that has come out. So I think this is what is expected, and if we have even more hawkish than the market expects, or less hawkish, more flat language, then we are going to get a reaction in the US dollar. The pound has also been under pressure. You can see the selling hasn't really recovered from the selling on Friday. There has been a little bit of fresh selling because we had an MPC member, a Monetary Policy Committee member, he has shifted his stance towards backing more stimulus. Prior to this, he was more saying that they should keep policy steady and wait for data. Now, for cable, 130 to 131 has provided some support in the past, so it will be interesting to see whether this area is going to hold, and people are expecting the pound to trade in a range, so we'll see about that. On to oil. I think the price of oil is becoming important news. It is trading below $44. It's hurting commodity and other petrocurrencies. And the important question to ask is, will it hurt risk assets at some point? That will be very interesting. Maybe if we break a big figure like $40, then a lot of attention is going to go to the drop in oil, and it could hurt risk assets as well. Now, there is talk of oversupply, and we have the US rig count rising, albeit it's rising from very low levels. And as this was written, US crude oil, US WTI oil broke below $43, so something to watch there. Now, for the indicators, we had the New Zealand trade balance. There were no surprises there, more or less in line. As we said, a very quiet European session in terms of data. And in the US, again, we have the FOMC meeting starting in Washington. Consumer confidence is expected to drop, and we also expect a rise in new home sales. So, that's all from me for today. Thank you very much for watching and have a great day.